Taking a look at the interest rate market today, I want to focus on the two-year note. The two-year note really was stronger than relative to the rest of the durations today. We did see the two-year note finish higher on the day, right around the 108.017 level. So we did see a high of 108.021, a low of 107.30.7. So again, higher end of the range today. We did see a little moderation later in the day, but nonetheless at the higher end of the range. And when you look at the week over week change in the two-year note, really not too much of a change. Last Friday we closed at 108.021, so we closed just slightly lower than where we closed last week when you look at it week over week. Some of the driving factors today, I think you got to focus on the data this morning that came out. We saw it. We had a lot of data come out from the U.S. standpoint this morning, and when you look at personal income and spending, pretty much in line. Personal income a little bit higher than expected, yet those inflation numbers pretty much in line with that lower end of the range, 1.4% year over year right now, and that's below the Fed index of they're looking for 2% on that number. So again, inflation well in check, even though we saw personal income higher on the day. Also, we got a number in the industrial side. Purchasing Managers Index, the Chicago PMI number, stronger than expected, and I think that had an impact on the yield curve today, and you saw that play out between the 2s and the 10s as well. And speaking of the 2s and 10s, let's look at the yields as we finish out the week. Currently, the 2 went out at one spot, 506 today, and if you look at the week over week, we're looking at a 10-year right around the 1.49 level. So again, that inversion persists between the 2s and the 10s, but it did narrow down to just about 1 basis point today. We did see it as wide as 3 yesterday. So again, those 2s and 10s, those yields are pretty much tracking each other right now, and a lot of market participants are certainly watching that. And next week, we're going to get some big numbers that could really shift this yield curve one way or the other, focusing on that unemployment report next Friday.